Good morning and welcome to the Money and Finance for Expats podcast. Let's bring onto the screen Paul Correa of FWM and Matt Penfold too. Good morning, gentlemen. How are you?
Morning, Carl. Really good, thank you. And you?
Very good.
Pretty good here in Portugal. We'll be talking about the golden visa over here, which has had a summary execution politically. We'll see if that goes through to full fruition. Quite the controversy over here on this side of the Iberian Peninsula. How's life in Spain and Gibraltar? And Paul, I think you're in the UK as well. How's the old place?
Yeah, it's brilliant. The weather was surprisingly warm. No train strikes. Everything running smoothly. It was brilliant.
No, not even the cold chill of Brexit in the air.
No.
Okay, excellent. Good for you.
Everything was good.
I'm sorry, I'm a bit surprised.
And then Matt didn't come with me, so I go to my favorite Greek restaurant, and every time I have my dinner, I send Matt by WhatsApp a picture of my, what's it called? Opa? What is that? The pork, chicken, everything mixed.
Oh, a Greek mixed grill.
Carl, it's incredible.
Amazing.
It's all the different meats and then the bread and the halloumi and the salad, and it seems to get bigger every time. So I get these pictures from Paul, which is very generous of him. But
stop it.
Yeah,
like the Money and Finance for Expats podcast with a little bit of a look at what's on offer in the UK culinary wise. So it's nice to get back to the old country sometimes, isn't it? Have some of those creature comforts. So good for you, Paul. Welcome back. We'll start this morning with this afternoon now in Spain, of course, with a little bit of a look at the financial global markets. How's that looking, Paul?
Well, we have some interesting data coming throughout the week. It's impossible to cover all the different bits of data that is coming through. It would take us 5 hours to analyze and scrutinize all the incoming data. So I've tried to keep it as short and simple as I possibly can. So yesterday we had UK Services Purchasing Managers Index. As I mentioned in a previous podcast, the PMI is an indicator of the economic health of the UK economy, and because it's services orientated and the UK economy is predominantly a services based economy, it's a very important piece of data.
Okay, it's this graph here, is it not?
It is this graph here. If you just take today global finance, yep, perfect. So the previous month's data showed the economy was effectively in recession with a reading below 50. Carl, I keep mentioning that the reading below 50 indicates that we are trending towards a recession.
Mm-hmm.
And the reading last month was 48.7, showing that we were in recession, which is, I can't show you with an arrow, I can show you mine, which is the previous month here, below 50. The market was expecting a slight improvement with a forecast of 49.2. So the reading would still be showing the UK economy in recession, but with a little bounce, a little tiny bounce. The data surprised the market. It actually came in at a robust 53.3 reading, signaling that the US economy has returned to growth in February and quite strongly as well. You'll probably see that you have to go back to June when we had a similar reading. Okay. So it would appear, which is contradictory to all the evidence, anecdotal evidence that we have, all the data that is coming through that is pointing to a slowdown. Well, not the Purchasing Managers Index. It has bounced extremely strongly in Feb. The reason, I don't know. Rising interest rates, weakening economy, and yet the PMI is backing the trend.
And back over that magical 50 threshold.
Exactly.
Yeah. Okay.
And then we also had the US Services Purchasing Managers Index also coming out yesterday. We saw, I think, a similar pattern to the UK, where the PMI figure surprised to the upside. So the previous month's data, as you can see there, showed that the US economy was technically in recession with a reading below 50. And in fact, as I mentioned in a previous podcast, the reading was even weaker than the UK and the EU. The reading was 46.8, showing going into a deep recession, major slowdown, again, supporting all the other evidence we've had, all the other data that's coming through. The market was expecting a little bounce, so a marginal improvement in forecasting, and the reading would have gone from 46.8 to 47.2. That was the general view in the marketplace, but the actual data came in at 50.5, signaling the economy is again on an upward trajectory and sparking fears that in a hostile monetary environment, if the economy is bouncing back strongly, strong employment data, and so on, then that could be inflationary.
Wow. If it ain't one thing, it's another, right? And it's so it's all
It's,
about,
it's,
so it's all
it's
about balance.
I have seen this before, Carl. I was thinking about it early this morning. I've seen it in the early 90s. That was the first time I was analyzing markets and data. And in fact, not doing at the time, podcasts didn't exist. But internally, I used to write a weekly notes, and sometimes send it to clients, and you start getting patchy data, which doesn't really make sense because one, and as you rightly say, some data points to recession, some points to a recovery, and you don't know quite know in what direction we're heading.
Mhm.
It's not something. How can I say this? This is not something that should surprise anyone, because some of the data is backward looking, it's lagging. Some of it is forward looking, leading indicators. Some of them is looking at the here and now, coincidental indicators. And sometimes, to remove the noise from all the incoming data, you have to kind of disregard anything which is not leading and
Mhm.
focus on the leading. So maybe that's something I should do for another podcast and just focus on the leading indicators and say, what does this tell us? But definitely the PMI has no doubt.
And when you
If the
saw this before, what time period was that?
in the 90s when we had, late 80s, beginning of the 90s, when we had, a big recession, and then there
Yes.
was a slow recovery when interest rates were 15, UK housing market collapsed. In 87, we had the stock market, the Black Monday, 27th of October 1987, and then the data was patchy for a while. I've seen it on a few occasions.
Wow.
um, so sometimes you have to extrapolate the leading indicators to see what the pattern is suggesting, because the rest could be noise, but I haven't done this here and now. But look, all three key markets, UK, Europe, and US, is now pointing to a bounce, recovery. And it's consistent with the data that the US is PMI is weaker than Europe and the UK's. But Europe seems to be in from what I can see, in good shape.
We'll have a look at that graph now. Just want to ask those watching, good morning to you. Good afternoon to you, wherever you are in the world. If you've got any questions for Paul or Matt here, do stick them in the chat, in the comments. Very happy to address any questions you might have about wealth management, especially around emanating around the Iberian Peninsula. Okay, so that European graph then,
The
Paul.
European graph, well, you can see the trajectory. Yeah,
Another
it
bounce.
it bottomed in, I think it's November,
Yep.
and it kind of, last month it was already in growth mode because it was above the 50 threshold. So Europe was not technically in a recession last month. The reading was 50.8. The market was forecasting a reading of 51. So barely any change, but still a positive direction. The actual data came in at 53, dispelling fears of a recession and causing concern, as I've mentioned, that inflation is more deeply embedded in the in a very resilient European zone economy.
Mm-hmm.
So positive from a growth perspective, very negative from an inflation perspective, because the issue which now arises is, are they raising rates more than we expected, and for longer, and whether that will be the tipping point that takes us into recession, and it may well be.
Okay. Right. So all eyes on this data, and we analyze it. Well, I say we. Paul analyzes it every week for our benefit every week. So make sure you're tuned in on a on
The royal we.
the royal we, looking at the data, which is presented to you at
My
11
wife,
o'clock.
my wife keeps reminding me that when she does something, it's always the royal we that creeps into the conversation. But anyway,
Yes, good advice there, I think, from the home front there. And a final graph then to look at. This I like the look of this, just because there's another rise there. What does it actually mean, though, Paul?
well, it means that inflation, as you can see, going back over 12 months, has been creeping higher and higher,
Oh,
as we know. Yeah.
yeah.
So the core consumer price index on a year-to-year basis has been moving higher. It seems to have leveled off in the last 2 months, and
Yes.
the core CPI measures change in the price of goods and services, which are purchased by consumers, and it excludes food, energy, alcohol, and tobacco.
Right.
A higher than expected reading. I mean, just to say that this CPI reading doesn't come out until Thursday. So we
Oh,
have to wait and see what the figure is for the month, for the prior month. But a higher than expected reading would suggest that inflation is more sticky than anyone expected. The market forecast is that inflation is going to stay flat again, so a third month unchanged at 5.2, which might be indicative that although there's no receding in the inflationary pressures, it's not picking up either.
mhm.
Um, and we have to wait and see on Thursday what that happens, because that's going to influence market direction. Yeah,
Yeah.
inflation comes much stronger, interest rates are going to rise much more than anyone expects. Again, the fear of recession. If it comes in weaker and we see inflation leveling off, and yet the European economy growing, although slowly, but then that could be very positive for markets. So a very interesting piece of data that could influence stock market direction over the
Which
course of this week.
great, and you'll report back on that, of course, next Wednesday.
Absolutely.
Okay, good. Excellent stuff. Now there are hot things, aren't there, that happen that are of interest to the global markets. AI seems to be that buzz.
Can I just say something?
Of course, yeah.
Ignoring these two graphs, there's two other pieces of data that
Oh,
come out.
sorry. Carry on. Yeah.
Sorry, there's two pieces of data that come out. Rather, not pieces of data, but two important speeches and events.
Right.
One is on Thursday, the Bank of England's Monetary Policy Committee member, Sir John Cunliffe, speaks and gives a speech on, and the eyes are on him to see whether he hints, because he's part of the monetary policy setting committee. So he's one of the votes that casts. Yeah, should we raise rates? Should we keep them on hold? Should we reduce rates? And the market always watches very keenly to see whether he comes out and hints. What is the general mood within the UK Monetary Policy Committee? Because that will dictate, what is the possible future direction of UK interest rates. So they always gives us some pearls and some hints of what the general mood is within that committee. So again, all eyes to see whether the UK is set for further aggressive rate hikes, or whether the next one is a bit softer. And then on Friday we have the Federal Reserve Open Market Committee, which is the equivalent of the UK MPC, and the member Philip Jefferson, who's one of the governors, speaks. And again, all eyes on the FOMC general sentiment towards further monetary tightening. Um, and leaving those two aside, again, very critical press releases and speeches, because interest rates are a main determinant of stock market direction. Inflation, stock market, those are key speeches that will influence the market, whether the rate hikes or not, because the market will absorb and analyze that data and try to understand whether it's just rhetoric or whether there's an implied threat of rates being increased more aggressively, or whether they're giving up on increasing rates, or whether they are softening their position. In other words, shifting from hawkish view to a dovish stance.
Mm.
But leaving that aside, there's a raft of US data coming in on Friday, from consumer sentiment to inflation expectations to new home sales, all of which are really important. But we cannot analyze that in such great detail. So maybe next week we can review the data that came in from the US and the speeches, and then we can try to understand a bit more what they're trying to, what the data is saying, what these press releases, speeches from the Fed and the Bank of England, what they're actually saying about interest rates.
Well, let's make sure
So
we do that.
it's a good
Yeah.
week.
Yes, it is an exciting week in the world of finance and money around the world, and business, of course, and the implications that these, let's face it, these two really powerful men will have on the world. These aren't elected leaders from government, are they? These are folks on boards, financial boards, who have an incredible amount of power, right?
Right now they hold the world to ransom.
Yes.
If they decide that they want to go really aggressive, I mean, they could, yeah, the economy could easily. We talk about going into growth. The indicator above 50, that can change at the blink of an eye if they tighten way more than the market can take. And that's why it's a delicate balancing act. Remember, keep saying it. Central banks have a dual mandate: stable prices, stable inflation at 2%, but also full employment. So they can't do one objective at the expense of the other. So yeah, right
I
now
don't.
it's all eyes on inflation, but that can change.
Sure. Now, I don't know if tell me if this is the right um, avenue of discussion here, or the appropriate context for it. But what agenda do they have personally? What's their remit, and what do you think is their personal agenda, respectively? Or is that not a good thing to go into right here, right now?
I love that you've raised that issue because
Okay.
I I love it. It's a fantastic point that you raised because
Right.
you may recall that about 18 months ago, um, some of the Federal Reserve, including Jerome Powell, were front running their own decisions. So
Mhm.
whilst they were pumping liquidity into the market, they were taking long equity positions and buying the right instruments, knowing that their policy was shifting in a particular direction and that this
Whoa.
was going to be positive for investing in a particular asset class. And they
Hmm.
were front running the market. In any other place, they would have been, um, hanged. Yeah, it would have been.
Yeah, in a different world, that some might call that allegedly insider trading of a kind, right?
Absolutely,
Yeah.
absolutely. But apparently, it was permissible under US law. So that what they were doing was perfectly legal. But of course, it was it was one thing is it is legal. The other thing is whether it's moral or not, right?
Yes.
Because when people were struggling through the pandemic, these guys were taking advantage of their privileged position, and privileged information is scandalous. They have subsequently changed the rules for governors and these people in the Fed. So now they have to either disclose or they can't buy whatever it is. But it's like what do you call it? Bolting
Oh, the stable door
the
after the
stable
horse has
door
gone.
once the horse
Yeah,
has bolted, or whatever you
yeah.
call it. Say, I mean, it's been done, yeah. But that's exactly what they did. This is not spreading rumors. This is actual factual. Yeah, they were all.
So they have an official remit to keep the global economy stable, if you like, whether that's explicit or
No,
implicit.
it's very clear mandate for all major central banks. It
Yeah.
is stable inflation, which they've
Yes.
defined as inflation of 2%, which in this environment is impossible,
Yeah.
and then full employment.
Okay.
Remember, the definition of full employment in economic speak is unemployment of 5%, because every economy they say there's 5% of the population is unemployable. I know it sounds harsh, but
Yeah.
they are literally unemployable. So if you have your unemployment at 5, it is considered full employment. Now, The US has unemployment of 3.4%, and most major economies are running very low unemployment. So yeah, they've met that criteria, but not inflation. And sometimes they are mutually exclusive. Yeah, you can't fulfill both. They're competing objectives.
Yeah.
So so now they're saying, okay, forget the full employment. Let's get inflation down, but that can change. As I said, if the economy that suddenly goes into a recession, they might have to take stock and recalibrate and maybe take a different course of action because they steered away from one of their other objectives, which is the full employment.
Incredible. So the role, that remit, was handed off by governments, central governments, to
Yeah,
these semi-autonomous bodies,
correct.
whose every words and speeches, as you were hearing this week, the world economies are hanging on. And they
Absolutely.
also have to temper that with their own personal agendas, like Bond baddies of like, I wonder what I might do with my speech this time.
Exactly.
Right? That's how it is. It's like a Bond script, effectively.
And there's a lot of rhetoric in that. And if you look at Jerome Powell's speech, he says everything to everyone. So yeah,
Right.
we're going to tighten rates if need be more aggressively and keep them higher longer. But if there's any evidence that the economy is slowing down and I can already see disinflationary trends, then we will slow down and maybe reverse gear. So, he hedges every possible action that he takes in the future. So the market tries to analyze and understand what he's actually saying, but in essence, he says a lot but doesn't say much because he covers every scenario and yeah, ultimately it depends on the data that's coming in.
He's speaking into the psyche, then, isn't he, of the financial
Completely,
world?
he speaks into the psyche of those in the market. Yeah,
Yeah,
I mean, he's taken a while. He's not he hasn't been the smartest to realize, like Alan Greenspan, that you
yeah,
have to speak the market speak.
yes.
In the past, he was too straight. Yeah, but now
Wow.
he's playing the game now much better than he was probably 12, 18 months ago. He's now completely using the right terminology.
And part of that is achieving a sense of confidence in that psyche that we're talking about.
Yeah, and remember that there's ways of managing inflation without following it through with aggressive monetary policy.
Hmm.
So you say things like, you know, we we're going to keep rates and we're going to hike much more than the market expects because inflation is deeply embedded in the economy, and this requires a much stronger position from the Federal Reserve. And we're going to stay strong in this course of action until inflation comes down. And what happens is that people then, they go, oh, interest are going to go up. We need to save. We need to be more cautious. We can't spend so much. We have to cut back we have to save more money. And then, that rhetoric then has an influence on inflation because
Hmm.
people then tighten their belts. So sometimes the language is just as important as the policy itself,
Wow.
if it
Okay.
makes any sense.
Yeah. So a lot to do with confidence and assuaging people's stress and keeping things stable, which of course can lead us to Portugal's golden visa decision and change. But there were a couple of other things. If I may just quickly squeeze in a couple of your and ask for your insight, both of you, really, on some of the big issues at the moment, from what I can see in the financial markets and the business world, are AI, and of course. I dread to refer to it as this, but World War III, the Ukrainian-Russian conflict. How do you both see that playing a part in this psyche that we're talking about? Let's go with AI first. It seems to be everywhere. Is there a lot of PR hype and hedging going on ahead of some AI launches and developments that may have an impact in the
No,
business?
I mean, artificial intelligence is going to, big data, algorithms, um, artificial intelligence, that is the future.
Right.
It's unquestionable. And, and the world will look completely, the employment market will look completely different 10 years' time because some things which are manual heavy, artificial intelligence can do the job faster, cheaper, better. and
Right.
there will be jobs in the economy that will be lost in 10 years from now. And it's important, that's why, that people reskill
Yeah.
and look at areas where artificial intelligence cannot compete, and you have some intrinsic value, some core skills that you can still that is an essential skill in the new world order, yeah, on the new world, yeah.
Hmm.
Because artificial intelligence, there's no question, we already have cars and coaches which are going to be self-drive. We have, in the financial services sector, there'll be algorithms that beat the market and do away with advice in certain, at least in investments. It's happening as we speak. And
Wow.
that's why I say the employment market will look vastly different now to what it is today. And artificial intelligence as an investment theme is one that we've been investing in for the past, I don't know, 2 years, Matt, maybe 2, 3 years.
Yeah,
Hmm.
just over 2 years, I think. Yeah.
Just seems to
It's
be in the news at the moment, doesn't it?
yeah, but the
Especially.
thing is, it's happening.
Yeah. Okay. And then talking of new world orders, what do you make of what impact on the markets did Biden's sudden appearance in Ukraine have yesterday?
Oh, I don't think anyone is enamored with Biden, but I mean
Mm.
Boris. In all fairness, he went in early on when
Yes.
things were looking ugly. Biden comes in. I saw the images, suited and booted, as if
Shuffling off.
he's
Yeah. Shuffling on
yeah,
across the
with
tarmac.
some dark glasses and looking fantastic in the middle of a war zone.
Yeah.
For me, it's more a publicity stunt than
Okay.
anything. It's a bit, he should have done it much earlier. If he was doing it with his heart and rather with his, you know, pulling this stunt,
Cynicism.
he
Yeah.
should have done it much sooner, to send a clear message to the Russians that the US meant business. But he stayed in the comfort of the White House, and other world leaders, and including, I can't remember, Ursula
Von der Leyen. Yeah.
von der Leyen. Yeah, she went in. I mean, Boris went in a couple of times, but I don't think it changes anything other than the allies are trying to give as much weapons and armory to the Ukrainians so they can push the Russians off their territory. I think
And
this
it
will.
hasn't impacted the markets then. The markets would tend to reflect your what you see as a cynical move from Biden.
No, I don't think it has had any impact whatsoever, from what I can gather.
Okay. All right. So let's
Because
move on.
it's more important how they back the Ukrainians than doing this publicity stunt in the middle of Kiev. Um,
Yes.
I don't see that changing the course of the war.
Okay. We have a comment from Kulvinda Upal. Portugal, good country, fast process for immigration with CEF in 2021, 2022, and 23. CEF, of course, the border force and migration authority here in Portugal is going through a reorganization. And as well as that, the golden visa of Portugal, Matt, looks like it finally had its marching orders this week in proposal in the government, but it looks like it might go through. What are you hearing and sensing about this?
No, I think it is coming to the end, Carl, and a few people come to us and ask our thoughts on this, and does this have implications for the golden visa scheme in Spain, for example?
Hmm.
I mean, for us, it seems a bit of a kind of bizarre move in Portugal, really, and why we're laying into politicians today, which seems to be a bit of a kind of theme of the
Go on.
chat.
Yes.
It does really seem that it's they're trying to kind of make a political point to kind of appeal to certain people, because they've connected to okay, we've got this kind of housing crisis, and I don't know, it's a little bit like a move we've seen in the UK in the past. Okay, we've got this crisis, let's blame the foreigners. Too many foreigners are coming over here. But in reality, with the golden visa in Portugal, when it was first implemented, people could buy their property and invest in property throughout Portugal and gain the golden visa. Then they made the changes, and you couldn't buy in Lisbon, Porto, the Algarve, the Silver Coast, and now they're saying okay, it's but why they've just banned the golden visa completely doesn't really make sense. If it is because it's linked, could they have not kept the golden visa and say, okay, but the investment needs to be not in property because there are other investment options? And I think you mentioned just before we started, we came on air, Carl, the number of purchasers that have been in Portugal tied into the golden visa has been very small.
Yeah.
There's not been that many. So for me, it seems like it's not really going to make any difference. So why do it? Why are they doing it? Is to probably act like they're doing something when they're not, to solve a problem. And it's we do see this everywhere with different points. I mean, a left-wing politician in Spain is now coming out and saying, okay, we need to get rid of our golden visa. But there isn't really a kind of crisis related to that in Spain, and I think we've told the story before of the wealth tax in Spain as well. But for those who didn't see it or aren't aware, wealth tax in Spain is decided by the regional governments. In Andalusia, they decided to scrap the wealth tax because people don't like wealth tax. It puts people off from coming here. Therefore, people aren't coming here to invest their money. So they might collect a small amount of money in wealth tax, but they lose out.
Yeah.
So they scrapped the wealth tax. And then within, I think it was about a week, was it, Paul? Maybe 10 days. Then the central government, which is more left-leaning, they decided to introduce a second wealth tax by the state that would overrule this one, and they can't cancel it. So it's I don't know. They make the decisions for the wrong reasons, and I think a lesson we can take from this is that unfortunately there are things out of our control, and there might have been people who are thinking, right, I'm going to apply for the Portuguese golden visa in 2024, and now they've missed their opportunity. Similar, for Brits moving to Iberia now, we need a visa unless we've got a European passport. So it's things do change, and you can't account for that. And we always talk about kind of planning in advance and making the right decisions and making sure you know what you're doing. Things can change, and people need to be aware of that.
So
I think if I can just add something, I think Portugal is just following the Irish line in scrapping the right of non-Europeans to claim residency in return, or get a golden visa to access the Schengen area in return for investment. So Ireland was leading the way in scrapping the golden visa. And Antonio Costa, I think, is the prime minister.
That's right.
He came out, I think it was last Thursday, and said that he was issuing, or he would be stopping the issuing of golden visas because he wanted to fight against price speculation in real estate. It's a surprising one. Look, let's look at the detail. Do you know how much inward investment has come into Portugal as a result of the golden visa?
I know from a from a reliable source that 9,000 homes were purchased through the Golden Visa scheme in all of its time in operation. So
And
its impact in the way that Costa is trying to portray is inaccurate, really, isn't it?
Exactly. Well, but it was an investment. Exactly. There was a lot of homes in that order, but equally, it was an inward investment of 5 to 6 billion euros into the Portuguese economy at the time when the US economy was the Portuguese economy was coming out of the global financial crisis, and with a desperate need. Look, I've got a client and a friend in Porto. He's a Portuguese national, and he tells me, leaving aside all these schemes, the underlying economy is very weak.
Yeah.
Why would you want to, rather than scrap it? Why didn't they think about reconstituting, remodeling the golden visa to keep the inward investment coming in? Sometimes politicians defy all logic. It seems that they, the grey matter between both ears is sometimes missing. Because I'm sorry, I'm harsh because it happens in every jurisdiction.
It's
Matt is
true.
right. Is point at the non-voters, the foreigners, rather than address the underlying issue. Look,
Well said.
firstly, the Prime Minister Antonio Costa hasn't come with a timeline, and there's no absolute certainty. I think they have to pass it through
They do.
the Parliament. No, am I right
Yes.
or am I
It's
completely
part
wrong?
it's part of a near 20-point plan that is addressing the problem of housing in Portugal.
Exactly.
Yeah.
But it's still to be passed. Yeah,
It is. It is. It needs final ratification. Yeah.
it needs final ratification, so it's still not passed. But look, let's analyze then some of the rather than all this noise. Let's look at the facts.
Hmm.
So, on the face of it, it looks like they want to address this housing affordability issue, which is crippling the middle class and lower classes in Portugal.
Yeah.
Um, well, firstly, apparently there's an estimated 6,000 new build apartment developments sitting with the Lisbon Planning Department are waiting for approval.
Correct.
If that would have been approved, then there would be um, more property in the market, and it would alleviate price rises. Yeah.
Yep.
So some of the it's in the hands of the government to alleviate the housing shortage by giving building approval for these 6,000 new homes. Yeah.
Yes.
Secondly, the system of planning is very poorly thought out, and planning permission takes much longer than it should because of bureaucracy and so on. If they address the bureaucracy, again, more property in the market, stabilization of prices. Apparently, I don't know whether this is true. I've heard that 80% of vacant apartments in Portugal belong to the state. And then the government has acknowledged that the visa program is not the principal factor behind rising housing costs, um, but that is just causing some uncomfortable questions
Exactly. But also, it's political
for the
capitalism.
government, and it's a symbolic gesture
It is.
to be seen to be doing something, knowing full well that they could address this issue completely differently.
Yeah.
And look, they could do all kinds of things, and I would, because if the system doesn't work, you iterate and constantly and you improve it. You don't throw it out for symbolically important reasons. You think it through again and you say, how can we keep it, but and make it work for the whole, for the country as a whole, without having a negative ramifications and implications for no for the average Joe in Portugal. And they could have ways of doing it. Look, they could have increased the golden visa to 1 million or 750 and said, look, we're going to get less in numbers, but it's going to just affect the higher end of the market and not the middle and lower segments. They could have done
Yes.
that.
Yep.
They could have had properties which are qualifying properties for golden visa, and then non-qualifying properties for the Portuguese market, so that the market has a 2 or 3 tier process. They could have insisted that rather than buy a property, they could rent, but they would have to buy fixed interest Portuguese securities, so that they give the funding to the Portuguese government to bring more inward investment and use that money to build more property. Think
Yep.
about it. You say,
Yes.
no, you don't have to have a property, you can rent one, but you have to invest 750,000 in a Portuguese fixed interest bond, government bond. That money then becomes the funding to build more houses, to bring prices even lower. But they
Yes.
haven't got the foresight and the vision to think outside the box. They could insist that rather money for the golden visa could go into a fund that goes into startups and entrepreneurship
Well said.
and small and medium-sized businesses. They could have insisted, now that we're going green, that they invest in renewables and infrastructure projects, right? And they could have thought this through more carefully. But what do? They want to be seen by the electorate to be doing the right thing, but they don't engage their brains. The problem with politicians everywhere. They think they know it all, but they don't. and they never consider the input of anyone else,
Well, there we
because
go.
it just shows a lack of
Vision.
intellectual engagement.
Yes, yes,
But
indeed, yes, indeed. This has been the Money and Finance for Expats politician bashing episode, but thoroughly deserved with the analysis that you give there, Paul. I would agree with all of that, and I'm giving the. I should be in many ways neutral and chairing this as a host. Rather than nodding so much and agreeing with you. I can't help it today. I really can't help it today. A symptom of what you're talking about. Look, that's what you're up against here in Portugal. From the Portugal news, one house built for every 9 sold. There is something wrong with the supply end, and no amount of political showboating, because it is a signal to the electorate. We're doing something here, and like you say, a bit of foreigner bashing, but it's also internal because there's a coalition government, of course, and it builds political capital to make these sorts of gestures and concessions.
But can you remember if can you imagine if they gave planning permission for the 6,000 new homes that are there?
Sure. Yes, it was
It's just
ridiculous.
insanity.
That's where the problem is for sure. And to say your money isn't welcome sends a really bad signal. Coming back to the confidence and the psyche of investment and the markets, it sends a really poor signal around the world, doesn't it? They could say your money is still welcome, but in the ways that you've outlined perfectly there, Paul, in these different types of schemes, rather than a political hatchet job. Also, part of the program here is to not issue any more AL, which are the Airbnb licenses as well. Now that perhaps isn't very helpful. It does need control in certain areas where Portuguese people have been priced out of the neighborhood. But like execution rather than evolution is not a very good way forward, is it?
No, but because what you want is iteration,
Yes.
constant iteration.
Correct. Yes.
You don't have to, as you say, it shouldn't be a hatchet job. It's just they need to think it through. It hasn't worked perfectly.
Yeah.
But some of the reasons it hasn't worked is because they haven't done their job.
Quite.
But how do they think it through? So you keep the golden visa, but you address the housing crisis.
Mhm.
But these guys are, and this is not about Portugal bashing. This is the politicians everywhere. In the UK, Sunak is coming under pressure for the tier 1 visa and the non-DOMs. In my market, it's the same, self-sufficiency and category 2 in Gibraltar. And wherever you go, it's, how can we bash the non-voting foreigner coming in and bringing their money and their wealth and inward investment?
Yeah.
Absolutely crazy.
Yep, very short-sighted
Crazy.
indeed. Very short-sighted indeed. So let's conclude on this matter of confidence, advising people as you do with wealth management coming to the Iberian Peninsula. It could be Spain, it could be Portugal or Gibraltar. Now, this does send a very poor signal to people thinking about making this move and this decision. And as you said, Matt, there's not a lot you can do about it if that's what the politicians decide to do, but there are other options. It's good to be aware, and it's good to be able to be flexible and pivot your decision. It's still a good, let's say it's still a good place to come to, right? The Iberian Peninsula.
No, I mean, Portugal and Spain and Gibraltar, they were incredible places to live. Once you're here, that's fine. It's getting here, which is maybe the difficult part. And Portugal and Spain, bureaucracy moves so slow as well. So if we're dealing with things like kind of visas and your taxes and it's complicated and you do need somebody by your side, and that's what we're offering people, to hold your hand through this process, however you want to describe it. But yeah, I think we sometimes think maybe the bureaucracy in the UK is bad, but in Spain and Portugal, it's 10 times worse. It really is. And it's a new country for Brits and expats moving there. So we can help you kind of navigate through the forest of bureaucracy.
Very good. Accurate. The hatchet should be used not in politics, but cutting through that bureaucratic jungle. And
Exactly.
You can get help with that from FWM here. So the final message then is like, it can be challenging. Help is at hand with Paul and Matt here, and the water is still lovely, right? And it's warming up as we speak.
And the food is fantastic as well.
Okay, final thoughts then. Let's start with you, Matt.
Final thoughts, right? If there are any politicians watching this, we don't hate you all. We promise, honestly, and it's not intentional. So we'll maybe be praising you next week. Probably not, but maybe. Who knows? Tune in. Yeah.
Okay, thank you very much. And Paul?
Well, I mean, I think talking about hatchet jobs, maybe that's a solution. Yeah.
Oh no! I hope to end on a positive note.
No. Yeah, it's madness that they are scrapping the golden visa. I fear that other European countries will do the same.
Yeah.
I think at the time when the global economy is a bit slippery on the on the edge of the cliff, that we don't know where it's heading and whether further rate hikes might push us over the cliff, that we're even considering scrapping programs, whether it's the UK, Gibraltar, Portugal, Ireland, that is going to stop inward investment. I think it defies all logic.
Okay, so still a great place to come. Help is at hand, and don't let the politicians get you down. All right,
Absolutely,
fantastic.
yeah.
We'll see you next week. Take care, fellas. That
No
was
problem.
great. Bye
Thank
for
you.
now. Have a great day.
Thanks,
Bye.
Carl.